opportunity zones, a lot to understand there, right? Big topic, big benefits. The opportunity zones were created with the 2017 Tax Cuts and Jobs Act at the federal government level. So it's a federal tax incentive program to stimulate investment in underserved communities. And an opportunity zone, the federal government handed the designation of opportunity zones, which are census tracts, right, based on it was 2017, so the nearest census was 2010. They handed the states the initiative and the power to designate which census tracts in their state would be designated OZ. And a lot has, right, we're 10 years removed from the 2010 census. So what we target are land and real estate within, in an OZ census tract, but that is now firmly in the path of growth. Like you can look at a national map of opportunity zones, and some of those opportunity zones, there's a huge one in Death Valley. I don't know what you're going to do with that. It's a national park. I'm not sure what sort of investment you're going to stimulate there. And there's opportunity zones where the community could use some investment, but it's not quite ready for private sector investment, right? It needs like public sector support. Like it's not safe at night there. Like we're kind of looking for that OZ path of growth, where it's safe to live and do business, but also looking for investment at the same time. And that's where we're focused. The other thing I would add about the opportunity zones from a financial standpoint is if you have a tax consultant do the calculations, the after-tax IRR is about 400 basis points higher than the pre-tax IRR, right? So if we're targeting a 16 IRR deal, like a 16% return, after tax, that's really a 20% return, right? That's adding 400 basis points onto your return. That's a big deal. And the thing about the program, you got to be vested for 10 years. So from construction start, that's time zero. You got to be in it for 10 years. At the end of 10 years, you take your basis. Let's say, right, you built let's say you built a $10 million project in 2020. Let's say like you started construction in 2020, hypothetical, right? 10 years, right? You started construction in 2020. It's 2022 that you finished construction 2 years later, right? At that point, you spent $10 million. At 2030, you've been vested for a total of 10 years, right? There's your 10-year timeline. And the value of the asset is now $20 million. And you mark your equity to market, right? It's like the same thing like buying Google stock in 1990 for $10 a share. And then in the year 2000, it's worth $300 a share. And if you sold it, you get that you mark that $10 per share basis to market to $300, right? Then you can sell it without any tax, without any cap gains. So that's a powerful incentive. The most accretive, like the most financially impactful aspect of the OZ program is the ability to mark your basis to market. So whatever gains you have, you no longer have gains. When you go to sell this asset in 10 years, you won't have a capital gains event on realizing that sale, right? There are other lesser incentives which are part of the program. So when you do an OZ investment, you have to invest capital gains into the real estate project, right? And those gains, if you have, say, $1 million in gains and you owe $200,000 in taxes, right? That you have to pay, there's a deferral in the payment of that $200,000 in taxes. That deferral event goes to 2026, right? In 2026, you've got to pay your $200,000 in taxes. However, if you are vested for 5 years prior to 2026, i.e. the end of 2021, then you can take it's a 5 or a 7 year discount off the $200,000, right? If you were vested for, I think it's for 6 years, if you had to be vested by 2020 in order to be vested for 6 years by 2026, then you would have had a 10% discount on the cap gains taxes that you owe from whatever it was that you exited.